Whenever I talk about this company, I feel like Ben Wyatt in Parks and Rec when he's talking to Tom about starting a business on being like a wholesaler for laundry chemical cleaning supplies. And that's not only because this is a very boring company, but because they're in a very similar business. Now, that being said, even though it's boring, I am not one to miss out on an opportunity if there's a chance to make some money safely. And so today, we're going to be taking a look at Ecolab. Hey everyone, and thanks for joining me today. My name's Matt, and as I mentioned in the intro, today we're going to be doing an analysis of Ecolab. Now, before we start with that, I do just have to say I was looking at my YouTube analytics, and I noticed that about a little over 92 or 93% of the people that watch my videos are not subscribed to my channel. And while I haven't been one to really throw that at you and always say like, subscribe, comment, all of that stuff, might have to start saying that if people don't start subscribing, since that's such a big difference. But keeping that in mind, I'm watching and making sure you guys actually are subscribing, just helping my channel grow so more and more people can get access to this content. So, sorry, had to get that out of the way, but now we can continue talking about Ecolab. So, I have kind of a funny story when it comes to Ecolab and why I'm talking about this stock. I should say first that this is a stock that I own, but again, it's one that I've owned for many years, and it was actually one of the first stocks that I purchased. I originally had a Roth IRA with a mutual fund in it that had a high expense ratio, so I was looking to switch that into something else. This caught my interest, and I bought it, and it's done very well for me. But the way it came onto my radar, the way I thought about this as an investment, is my first job was working at a restaurant, and I saw these boxes with these really colorful chemicals, and they were all labeled Ecolab. And so I was just curious. I was like, what is this company? And they were on the dishwasher that we had there. They were on all the other chemical supplies that we had. And then as I went to other restaurants or went to hotels, I kept seeing this name over and over again. And so I kind of thought, hey, that sounds like something I can maybe invest in. Googled it, or it came up on the TV one day, and I saw Ecolab, and I was like, oh, nice. Went ahead and bought it. And that was about the extent of my research, but luckily, that has worked out pretty well for me. So let's talk about Ecolab today, and we'll do a quick analysis. Admittedly, since it's such a boring one, I think this will be a quick video. There's not a whole lot to talk about, and I'll be honest, I don't know that much about this company other than it's made me a lot of money over the years. So let's go ahead and jump right into this. So as I mentioned earlier, Ecolab is primarily in the chemical cleaning solutions business. Now they have a few... Sorry about that, there's a dog hair on my microphone. It was tickling my chin. But they have a few other businesses, but their main business focus is on these cleaning solutions for hotels, laundromats, restaurants, all of that good stuff. Now, it's worth noting, though, that the other segments that they have, I believe they call it the global institutional and global something else, are actually the ones that have been profitable so far this year. Earlier in this year, during the first 2 quarters, the food, restaurant, and all of that stuff was actually not profitable. And we'll talk more about that later. But this is a company that is very big, and it's, again, probably one you might have not heard of. But they have a market cap of over $56 billion. So this company has a huge global presence, and you also might recognize some of their biggest customers. Just to name a few, you would have Coca-Cola, McDonald's, Unilever, and Nestle. And the good thing about those being some of their customers is a lot of them also have a global presence. And as those companies grow, expand into new countries, or start building new structures elsewhere, they're going to need another chemical cleaning supplies. And so Ecolab tends to grow with these companies that, again, are already very large, but are continuing to grow. And since chemicals are a need, not a want, and it's something that you would genuinely use in your business, then it just makes sense for Ecolab to be growing with all of these companies, which kind of explains why they perform so similar to the market. We'll talk more about their beta later, but that's one of the biggest reasons why I like Ecolab. Now, during their earnings call, they did explain why the restaurant business, we'll just call it the restaurant business, keep it easy, took a hit, and it makes sense. Part of the reason is because when restaurants aren't open as frequently as they once were or receiving as much traffic, obviously they're not going to have as much cleaning to do. Now, that being said, they also suspended their lease payments on their dishwasher systems and some other hardware that they actually provide to these businesses. And so they basically said, don't worry about these lease payments for right now. Just make sure your business stays intact and we'll pick that up later. So that explains one reason why they took a hit there, as well as the fact that these businesses just don't need as much chemical supplies. Now, a lot of people might look at that as a negative, but there's a reason why I think that's actually a positive, and I think that's because there's going to be such a heavy focus on clean and sanitized spaces in the future, and I don't think that's going to be something that goes away anytime soon. So obviously, as people become more aware of sanitation factors, people are going to be cleaning more frequently, using products more often. If you've gone out since this whole thing has started, I went to Topgolf the other day, and I noticed as soon as we finished, everything got sprayed down. And so, obviously, that's not something that was happening prior, but now that people are using these products more and more often, it's going to create more of a demand for companies like Ecolab for their supply. And since they're such a large company, they shouldn't have any problems helping meet that demand. Now, with that being said, let's just take a quick walk through these numbers. Again, it's not the most exciting company, and I'm going to keep today's episode a little short here, so we'll run through these pretty quickly. We can see the PE ratio that they have is 33.36. Now, that being said, I don't actually believe they're profitable right now. I've saw so many different results when it came to their PE ratio, and admittedly didn't really feel like calculating it myself, so that's what I went with. That being said, I think it's a fair price to pay. They're nowhere near their market high that they've reached in the past 52 weeks. So I think with the PE ratio at 33 and with them trading at around 189, when I believe the market high was 230, I could be wrong, but it was around $220, $230, means to me that this could be right now undervalued. And I have another reason why it's undervalued, but we'll talk about that once we get through these numbers. They have a beta of exactly 1. As I've been saying these past few weeks, we're looking to have a more defensive portfolio than aggressive, and so having a beta that equals the market is perfect for me. Even if it was a little bit higher, that's okay, but once we start to get in betas of 2, 6, 8, any of those, then it really starts to get concerning. So a beta of 1 for my defensive portfolio is a great thing to see. They have a dividend yield of 0.99%. Now, that's a little low than what I thought. Again, you see different numbers and a whole bunch of different information out there, but that is a little low for what I expected. Now, that being said, this is a dividend aristocrat. They have been growing their dividend over 20 plus years, and so obviously they're a company that does produce income for people, and they're one of those, if you're a dividend investor, you'll probably have something like this in your portfolio. So it's not always about how much they pay out, it's making sure they can afford what they pay out. And so, as I've said before, I'm okay with a little bit lower of a payout ratio if that means that it's going to help support a stronger balance sheet and financial statement. Kind of everything I just said also goes for the dividend yield, so we can move on. I'm sorry, for the payout ratio. The quick ratio is 1.12. Now, I did also see, again, elsewhere where they had a quick ratio that was less than 1, meaning that their liabilities outweigh their assets. But with this being such a large company, even if they did have a quick ratio less than 1, I wouldn't be that concerned because they're such a large company and they're able to leverage this debt pretty well. And they shouldn't have any problems getting loans or getting money when they need it, given their market cap is so large. And one thing that I don't think we've talked about here, but it's always worth mentioning, is when a company pays a dividend like this and they're this large, but you see that they have these low quick or current ratios, that could mean that they're using the leverage to help pay out to the investors. So as the investor, that's a good thing because that means you will be receiving better dividends than if they weren't leveraging debt. But that being said, it does open up to more risk. So keep that in mind. But when you have a company with such a large market cap, that risk kind of balances out because of their, well, how big they are. Hope that makes sense, and I hope I didn't go down a rabbit hole there. Net profit margin of 10.46%. I'm cool with that as well. So while these aren't the most impressive numbers that we've seen with the company, again, I'm speaking from experience of owning this stock, and I'm not saying the same thing that's happened with me the past 5 years with owning this position is going to happen the next 5 years, but I will be okay as long as it maintains a steady performance in the future. Now, I know I said last week I'm going to start moving away from the more quantitative analysis and really just focusing on the qualitative analysis of companies, but since this one has not been the most exciting episode I've created, I wanted to include something like that since I know a lot of people out there enjoy this kind of information. So for this week, I use the dividend discount model to try and calculate the intrinsic value of Ecolab. And if you're not familiar with what the dividend discount model is, essentially all it is using what we can expect as future dividend payments to try and calculate the current present value or the current intrinsic value of this stock. So it's a little complicated. I'll go into more detail in a separate episode if you'd like, but that's what I use for today to try to get a intrinsic value of Ecolab. And you could see here that my calculation was around 202.63 per share. So not near the market high, but higher than what its current share price is, meaning that this could be viewed, if you're looking at this model specifically, as an undervalued stock. So earlier when I said we'll get to the undervalue, that's why I'm saying that, because this calculation shows me that it's undervalued by give or take about $12. When we see something like that, I always think that's a great sign for something to see, and so obviously it's going to be one worth adding to the portfolio. But I do have to say, I purchased this one yesterday. Reason being is because yesterday when I was doing my research for this, I noticed it was taking a little bit of a dive, and always seems to happen on Tuesdays. The stocks I want to look at are taking a dip and they're a little bit cheaper. And on Wednesday, they seem to skyrocket right before I buy them. So I never get them at the actual price that I'd rather purchase it at. So when I saw this, I took full advantage of it and I bought it. And I think it worked out well because I believe it's trading higher now than it was yesterday when I purchased it. So let me pull this up. We can take a look at it in the portfolio, and then we'll do that quick review of how the portfolio looks. Alright, and so yesterday I was able to purchase us 25 shares of Ecolab, which was around, I think we got it at $189.31. So putting us at around $4,780 as our total investment towards that. I think I'm okay with that as our total purchase for now. Probably not one I'm going to add more onto because starting to run out of money on my paper trading here. I think we've got showing about a little less than $35,000 left. Dividends have been helping me be able to make some more purchases with this account, but not going to be able to afford many more stocks on this paper trading, which is a little upsetting. But hey, we've been doing great so far. Just taking a look here at this portfolio since we've started this, we have a net gain of $8,763, which is perfect to see. I'm very excited about that, and I'm happy to see this portfolio headed in the right direction. I was very nervous when I started this series because I knew this could go either way building this portfolio, especially during times like this. It could either do very well, it can do nothing, or it can perform horribly. And I'm glad to see, knock on wood, that it's been performing well for us, because I think it kind of proves the point of a lot of people haven't been doing that well with their investment portfolios, and it might be for reasons like they're acting impulsively to what the market changes are, they're letting the news sway their attention or their decisions on investing decisions, or even just kind of the lack of knowledge of the companies that go into your investments and making sure you do the research before making those purchases. So in a time where some people's portfolios aren't doing great, I'm glad to see this one I'm building is, but don't want to speak too soon. Anything can happen, and that just kind of stresses the importance of having a portfolio that's, I think, blended between defensive and aggressive. So that's my analysis for today. I hope everybody enjoyed that and maybe learned something from this video. Probably never heard of Ecolab, and if you haven't, maybe this is one that's going to be put on your radar now. So, as always, if you have any questions or suggestions of a company you'd like for me to review, please leave that in the comments down below, and I'll gladly address that for you, or we'll take that into consideration. I hate to do it, but I'm going to have to ask again. If you wouldn't mind just liking this video and subscribing if you haven't already. Again, just helps my channel out a lot and allows for other people to see this, so helps them see these videos as well, and hopefully they can learn something from these. But with all that being said, we can wrap up this video for today. You could be anywhere in the world and you're right here with me, and I really appreciate that. So thank you so much for taking the time out of your day to watch this video, but I will let you go ahead and enjoy the rest of your day, and I'll see you next time.